Okay, happy Wednesday. It's December 29th, 8 a.m. my time. We're about 30 minutes away from the US market open. Prices of Bitcoin trading at 47,400. Yesterday, we obviously had a pretty sharp slide in the market, heading all the way down. This morning, hitting to a low of 46,500. Looks like we're maybe recovering in this area, maybe building a slight base. If we start pushing up out of this high, which is around 48,100, we can maybe start talking about the weekly open marker over here. If we start breaking down again, then the easiest target marker is 45,500, right? So I think as of right now, one thing that I don't like is if you use this tool right here, okay, let me see here real quick. If you use this tool right here, you see that there's a significant amount of volume that has taken place at this previous high, okay, at this pocket, this marker, which is around 48,500. Now, on the way down, I was hoping that that marker would be support, and I showed you all that chart when the prices were coming down. Now, unfortunately, we actually broke through that level and we're below it. So generally, the thought process is when you see something like this happen, it's like the idea that we actually broke through a very high volume congested area, which is, this level right here. And the only way you can do that is if you have some significant sell pressure. Oops, I don't know what happened there. Let me go back. The only way you can do that is if you have some significant sell pressure to break that level, right? So for the most part, I'm looking at this area now and saying, okay, well, even if we head back up towards it, this might pose some resistance on the way back up. And that level is around 48,600, okay? It is entirely possible that, I don't know, maybe today or tomorrow, we just keep heading down slowly and head towards the 45,500 marker, which previously supported price, 3 times on 3 different occasions right here. And we may just sweep those lows, which is why I indicated this X, right? That's a lot of liquidity that may be sitting, below these stops and these stops right here and, these stops right here. Okay, so keep an eye on that, just in case we do break down. Do I see a trade right now? Not really, but if I were to take anything, I'd say, okay, well, maybe you want to go long here, stop just below this low. The first target profit is this high. Next target profit is the weekly open, just in case we see some, very heavy outperformance by BTC, right? But I think the overarching theme for BTC and crypto as of late has been, just a very slow grinding down market that every pop just gets sold into. And you could kind of see something that I pointed out right here in this area is in the Bitcoin analysis section a couple of days back when I mentioned, hey, there's a big BTC inflows uptick that's happening on the on-chain data. And this looks very similar to what happened back here in June or July. Let me point that out again, what I was kind of looking at, right? I was kind of looking at something like this. Like, I think this was kind of the trend line that we were seeing. Maybe it was more so like that. Okay, that was kind of the trend line that we had. And this pop was like a deviation, right? Because we didn't stay above this. We broke down inside. So that is definitely seen as, a failed breakout. And now what you have is, okay, maybe you have something similar like right there. Okay, we're breaking out, but are we just retesting right here? And are we going to break back up higher? Are we going to fail this, retest and just keep selling off like we did back here? Honestly, I'm not really sure what's going to happen. Okay. And I don't really care to guess right now. The market is so uncertain. I mean, any person who's telling you with higher certainty, price is going to be at this level and this level by so-and-so date is just probably blowing smoke up your butt. It's okay to sometimes just say, in the market. I don't know what the hell is going on. Let this BS figure itself out. Call me in a day or a week when certain levels are broken. Okay. What I will say, however, is maybe there are certain assets that may give you scalping opportunities. But again, you want to be very careful, because if you don't really know how to set your stops properly, and let's just say, with a gust of wind, Bitcoin just gets, pushed over the edge and it just nukes your altcoins like, further and further. Well, you don't want to be stuck in a bad position just because you were hoping that Bitcoin bottomed, right? This is the same thing that I spoke about yesterday is, people ask me about Sushi and FTM. Well, Bitcoin hit technically a lower low as of yesterday, and Sushi is still kind of trading in a range, right? I mean, it's maybe developing a pennant of some sort like this and like this, but ideally, like I was hoping Sushi would really respect this parabolic uptrend. It's not doing that. And more importantly, it's actually hit key resistance points, which is the monthly pivot right here in $9.60, which is the key SR level that we marked out from way the hell back here in July, multiple times here in September and October. And now we're banging back into that level, right? So after a solid almost 80% move or so up to this from low to high, I don't know, you got to ask yourself like, okay, am I expecting another, 20, 30% pop from Sushi? If so, then okay, then I mean, this is a solid trade. But I don't know. I think as of right now, maybe you don't want to be trading leverage in anything. If you have spot Sushi, great. If you bought down here, great. If you bought somewhere in the middle, great. You may even consider taking profit at the current price. But would I enter now? Probably not. Okay, probably not. All right. Other assets that I think may give you slight outperformance, maybe Curve Finance, right? Like bouncing off this very key level, $4.80. Very good sign, right? I mean, this is a pretty clean retest right here on a daily basis. This is like that. Okay, so you broke out of here, retested, and now if you just start pushing up higher from here, well, then all you really need is you can enter here, stop just below this low, right? First target profit here, and next target profit, previous all-time high, which is $6.40. Okay, and the problem with this is, if this starts breaking back inside, the invalidation is very clear. You do not want to be messing with these lows right here, because this is really previous range that Curve has tried multiple times to break and hold above. It's sold off every time it gets above this level and breaks back inside this level. So to make it very binary in a sense, right? If price happens to start breaking back down inside this level, you just cut the trade and you say, fuck it, I'm out, or I'll short, or really just, get out of the position. It's as clean as that. So I can see a reasoning why, if you want to go long here and you want to have your stop just below the yesterday's daily low around 462, and you're aiming for this local high and then previous all-time high around November, which is 640, I could see that reasoning, right? But remember that your invalidation should be just below this low. Don't make excuses and say, all right, well, maybe it'll wick here and it'll push back up. The worst thing to do in trades, especially in a very uncertain market, is to start negotiating with yourself why something may hold a certain level and why it may come back and why you should be bailed out of your position. It's the worst negotiation tactic that traders often make, okay? Because we're trying to strike a deal with ourselves, but in reality, the market's really the one who's going to be screwing you, right? So there's no point in trying to convince yourself in and out of a position or moving your stop up and down. If the market is telling you, hey, I'm breaking this level, get out if you want to, or else, I'm going to eat you alive, then you follow the market. It's as simple as that sometimes, right? So the Curve is one of those setups where okay, if it breaks inside this level, you might really be screwed. Maybe you wick down here and you push back up, but maybe you don't. Maybe you just dump another 20, 30% like we did back here. Okay. And I can tell you right now, most altcoins, I mean, even Sushi, the fact that it's sitting near daily resistance and it could easily just get rejected and sold back down. I mean, at the very least, you need to seriously consider de-risking your positions in Sushi if you're already in profit, or you should seriously reconsider taking a position if you're already in one, meaning you should reconsider not being in a position. All right. Near, probably the only one that looks decent, from a daily basis, right? I mean, what you have is previous, trend line resistance that's set up. And then, this is your breakout, retest. Maybe you start pushing back out. Same thing with near, just like I mentioned with Curve Finance, which is, well, the trade is pretty clean, right? Like, I mean, if you go long here, your stop should really just be below this low. And your first target profit is this high. And then your next target profit could be, I don't know, maybe you do like a fib extension, something like that. And you say, all right, well, my next target profit is probably going to be 1747, which is a 1.618 extension. And the 2.0 is somewhere up here around $20 to $21. Yeah. So that's one way to go about it. The other way is, like I said, if you get stopped out, well, then you can kind of consider going short if you want to. All right. Let me see how the futures are looking right now, just before the open, because we're about 14 minutes away. Nothing going on. Really kind of, I don't know. You could make the argument there's a head and shoulders, but I'm not going to do that. It's kind of just looking like it's floating, higher with higher lows. So that looks fine. Let's look at NASDAQ futures. A little bit heavier here on the NASDAQ side. Remember, NASDAQ is an exchange that is heavily filled with growth and tech stocks. Okay. And the fact that next year we're going to have some pretty significant impact on growth in tech because of interest rates rising. So you're probably wondering, okay, why does it matter that interest rates being higher is going to hit growth in tech stocks? Because all those companies really start predicting well into the future for future cash flows, meaning they're kind of looking at future interest rates that are going to be low for financing purposes, right? And so if right now, starting in March, when the Fed, here, let me show you real quick, March Fed interest rate hike, okay? If starting March, we have an interest rate hike that's coming up, a lot of these stocks are going to get hit. Let me give you a perfect example of who's going to get hit, okay? Facebook more than likely might get hit, but it's also possible that maybe, Facebook has already kind of factored that in over the last few months. Maybe you have this W bottom, okay? ARC maybe pops up, like, ARC is literally like sitting on key support levels right now, okay? ARC maybe pops up like right here, somewhere at this base, and then maybe it sells off further right around that first rate hike in March. Okay, because ARK is this ARKK, the innovation ETF, heavily concentrated with growth stocks and biotech stocks. Okay, all of which are going to get just completely whacked once this interest rate hike happens. And by the way, you could read up on this on your own if you want to. All right, this is another topic that I've mentioned a little bit in the newsletter that I'll be releasing soon. Okay, so point is, these stocks, okay, innovation and growth and tech, all this stuff is going to get whacked due to higher interest rates. And there's a argument to be made that crypto might follow along those lines. Now, I personally don't buy that argument directly regarding interest rate hikes impacting crypto, because crypto doesn't really have heavy financing for projects for research and development and growth, right, and expansion. And they don't like borrow money from big banks at cheaper interest rates and stuff, right? They don't predict out in future cash flows like say Facebook and Twitter and a lot of these tech stocks do. We don't operate the same way. So I don't really buy the idea that crypto is going to be whacked because of the interest rate hikes. What I do buy into the argument of is crypto might be positively correlated with a de-risking that may be happening in ARK, right? In Twitter, in Facebook, in Salesforce and Amazon and all these different companies. And so why is that important? Well, if those companies are starting to free up cash, meaning funds are going to start selling some of the stock because they believe that these stocks are going to go down because of the interest rates hiking, well, that means they're going to have to start freeing up cash from other parts of their portfolio to be able to balance out their positioning, right? And that may mean crypto is one of those asset classes that gets whacked simply because the correlation of one asset in the US equity market is getting sold. That's one of the reasons why I could see crypto getting sold, not because of interest rate hikes. So I guarantee you that in March, some guy, some dude on Twitter is going to start talking about, hey, well, interest rates are hiking and that's why crypto is going down. That's incorrect because Bitcoin and crypto do not have anything to do with interest rates, right? We're not a future cash flow dependent company. We don't have companies. We have projects which are not heavily debted, right? A lot of these projects use external financing, a lot of debt that they raise. And that's why interest rates hammer those stocks. All right. So keep this in mind. These are points to, keep in your arsenal when, some people mouthing off on Twitter and they start talking about the Fed and interest rates. You can retort and you can tell them like, hey, this is incorrect. You're feeding wrong information, which is a big part of the crypto community is they just like to make up facts because it fits their narrative and it fits their bias, right? And it's sad because a lot of people buy into it. They buy into the wrong facts. They buy into the wrong theories. Okay. All right. Silas says, has the Fed ever purposely set up pumps? For example, say they will hike rates, then pull, decide not to. Yes. Okay. This is a fantastic question. And I actually just did a video with our friend here at Options Insight. We talk about the macro picture of, why exactly interest rates could be hiking, what could be the purpose of that. First of all, remember, interest rates get hiked because right now, Fed is just trying to curb inflation. Everybody in America is now looking at all the numbers regarding standard of living and how much it takes to live in America, to buy a piece of chicken or to pay rent or fill up on gas, right? And they're seeing inflation all around them. Why is that? Well, because inflation is generally caused by a lot of people having a lot of money or a lot of money being in the system in general. And so when there's a lot of money in the system and a lot of money in people's hands, what do? Well, you have to pull money out of the system. How do you do that? You raise the interest rates. You make it more expensive for companies, for products, for goods, consumer goods, et cetera, to make it a little bit more expensive to create their product, right? You make it a little bit more expensive for people to want to spend, okay? And that reduces inflation. People start cutting on spending. Companies will, dial back maybe their expansion. They will dial back their overproduction, things like that, okay? So that is quite possibly why we're seeing the interest rate hike. And what that will do ultimately is, yes, it will make the market sell off, okay? But it won't make the market sell off aggressively. It'll make the market sell off to a degree where people might panic and the market might go down. And then the Fed, because they just raised the interest rates, they might say, well, holy shit, like we raised the interest rates and the market nuked 20%. And then what will they do? They'll do the only thing that they have in their arsenal, which is lowering interest rates again, right? So what the market has really done is it's painted the Fed in a corner, Okay, the Fed literally has no other options than to keep interest rates low. So even though we're seeing these 3 interest rate hikes, okay, March and June, by the time we get into the second one, I mean, you're going to be basically begging for the Fed to lower interest rates again. It's the whole like cycle of shit that you want people to do the right thing, which is inflation is high and you want the Fed to raise interest rates. But then once you get raised, everybody gets screwed. The market goes down. People have less money in their hands. People feel like because the market is going down, the economy is probably going down, right? All these things start factoring in, and you're like, oh, well, please, Mr. Fed, like save us. Please lower interest rates again, right? So once again, you get into that cycle of maybe persistent inflation. So trust me, this whole 2022, it's going to be a very uncertain and volatile year. All right. Anyone who's telling you that 2022 is just going to be a cool, bull market in crypto and we're just going to keep going up, I don't buy it. I don't buy it just yet. Okay. I think many factors need to start coming together. Maybe even some big sell-offs need to happen. Then maybe we could start talking about, all right, maybe the bad news is behind us. Maybe we can start, thinking about the market potentially going up from here. Okay, just FYI, real quick, I want to talk about Sushi. It looks like it wants to pop up. We're very close to the US market open. So keep an eye on Sushi. The current 1-hour candle looks very strong. Near as well. Okay, the current 1-hour candle looks very strong. So definitely keep an eye on these assets right now. Okay. Any other questions? So sorry to go on this Fed macro rant, but there's a lot of confusion and questions about how this stuff works together. And I'm telling you, you're going to see a lot of misinformation on the web and on Twitter. And it's going to make you make rash decisions back and forth. And you're going to chop yourself up. And you don't want to do that. Because in 2022, I believe that the best position that you want to be in is probably decent amount of cash, partially long bias, but also, careful about the downside. If you're not careful about the downside and you're just in up only mode, I really think that you're going to get shocked. I mean, like shocked, like, a lightning bolt, like striking you shocked. Okay. Because if you're not prepared for any downside, I don't know what to tell you. There's just too many headwinds coming into the market to make you, want to really pay attention, open your eyes up. Is that clear? Did I just go on a rant and it went over everybody's head? Are we good? Okay, no one's answering, so I'll take it like no one understood what I was talking about. Okay. All right, so today on my list, I've got to read this Arcane Research. I'm like maybe third of the way or halfway through it. But remember, I put this out in the official announcements page right here, Arcane Research. I've got to finish this. I just want to see exactly, the summary of what happened in the markets, just get a good amount of data points headed into 2022. All right. Cool. Yeah, that's about it, folks. I'm not really seeing anything special in the heat map data. I thought it was kind of interesting that, we're kind of seeing somewhat of a base created here. But to be completely honest, like if you actually look at, the footprint data, I'm not seeing what I'd like to see in general footprint, profiles. Okay. Bottoms. Okay. Here's how I like to see bottoms, right? Let me show you guys real quick. Okay. So, what you really want to see in bottoms is, let me zoom into this. Sorry, my zooming feature here on this computer is kind of shit. All right. So, these are the last several days. God, what is happening? The last several days down here, let me zoom into this a little bit further. Okay. 1 second. Okay. So here's a perfect example of how I like to see bottoms, right? First of all, you want to see a bit more concentrated volume like this. See these little beehive looking things like that, like that. Okay. Let me move this. And like this, see all this structure right here, right? That's a good amount of volume created. Okay. Even something like this and like this. What exactly is the importance of that? Well, that means that a lot of selling and buying took place, meaning a lot of activity took place at these lows right here. Okay. So what we want to look at in these profiles is that you want to really see, a beehive style structure where this kind of sell pressure and this kind of buy pressure, a lot of volume is taking place at the lows. Like at these lows is where you want to see that. Okay. Now, what I'm recognizing in the market right now is we're not seeing that. Okay. As we're pressing down, okay, we're not really bouncing up. What we're doing is, okay, we're creating a lot of profile here, but we're also creating a lot of profile up here as well. So that means that there's activity taking place at the top of the range of the candle, but also at the bottom. Same thing right here and right here. And this goes along with my thought process of, remember yesterday I said on my Twitter feed, I posted a link about this. I said that the worst part of markets is when sellers are relentless and they slowly keep tapping the sell pressure drip button, right? Buyers trap themselves by watching the 1 minute chart and buying every single small bounce, hoping that they're catching the bottom. But in reality, what's really happening is the market is slowly just bleeding you out. If you look at these profiles, what's really happening is, here's how I sort of demystify sort of the construction of this profile. Okay, what I see here is there's activity happening at the highs, but the passive sellers keep driving the ask price down, meaning they're forcing the price down because they keep selling and selling. Same thing happening right here. You see activity at the top of the candle, but then you start seeing the candle drip lower and lower. So what's really happening is these buyers eventually, right? Whoever thought this is going to be the bottom, this is going to be the bottom. There might be another candle that has a profile like this and a profile like this down here, where these buyers up here, these buyers and these buyers all puke their positions when prices go lower and lower into the 45K or 44 or 43, right? Wherever that may be. The buyers will eventually become the forced sellers on the way down. And that's kind of what I'm noticing in this kind of profile that's being created in the price action. Okay. Are we going to do a price prediction competition this year? Yeah, I mean, why not? I think it would be fun. All right, we can totally do that. Should we do it on a quarterly basis or year end for 2022? I feel like that's too far. I don't know, but I think I'm open to a discussion about price prediction. I can give out some prizes or something, some money. Aaron says, did I cover Solana earlier? I didn't get into the video till later. Okay, yeah, let me cover Solana real quick. So just FYI, Aaron and anybody else who's getting into the video right now, my overarching theme for today's video is that there is probably an opportunity to be taken for the long side, but just remember that you don't really have to be in a position in this market if you don't want to, because there's a lot of uncertainty in the profile and BTC getting created based on what I just spoke about here in the footprint data, right? The volume clusters that I spoke about, as well as, just stops that are sitting just below the daily lows, right? They are clean invalidation levels, meaning for near, the level is around $13. Okay. For Curve Finance, the level is around 464. Okay. For Sushi, I probably say, that level is somewhere around, today's daily low, around $9. Right. So point is, if you're looking at, these candles right here, all right, and you're thinking that, okay, I want to go long, where should I place my stop? Well, it has to be below the daily low or the most recent 4-hour low. All right. And if you start seeing price go under that, then for the most part, you probably want to cut and you want to get out of those trades. Okay. All right. So let's talk about Solana and then wrap it up. Where's Solana? There it is. Okay. So Solana, once again, coming back into the previous point, which is where we had this kind of like consolidation. We took out all those stops right here. So really, from here, you're hoping that Solana makes it back towards 190. And your stop has to be below the current 4-hour low, which is around 170. That's a pretty good risk to reward, right? Like if you're thinking about going long right now, the trade is something like this, like that. Okay, so risk about 2.48% for 8.48% gain. It's pretty good, I think. What I will say, however, is that personally, I think the strongest looking assets right now are these, Near, Sushi, FTM, and Matic. And I think, you can even see Sushi on like a time frame basis, right? Curve and Sushi right now are sort of leading the pack on the movement up from the lows of the market that we had, a couple of hours ago. Okay, so pay attention to those. Solana is somewhere, where's Solana? Solana is like way over here, at the really the bottom of the pack. So I don't know, maybe a decent trade, but I think there's better trades out there if you're just considering scalping. All right, cool. But yeah, here's kind of Sushi, trying to break out. So definitely something to pay attention to. Okay. All right, everybody. I think I had a pretty long video talking about the macro. I'll post the video shortly. Remember that all our videos are posted in the Advantage Announcements channel. I post my analysis through different channels. I'll try to do my best in 2022 to organize these channels and maybe have less channels. But, for the most part, make sure you guys follow the different channels. Okay. All right. Let me see here. There's a question in the chat. What do you think about looking at funding like this and waiting for a big red spike on BitMEX funding before thinking of a bottom? Worth anything or just a trash thought? No, that's a great thought. Listen, like negative funding is something that we've mentioned before. Okay. All you got to do is, in fact, I personally think that BitMEX isn't the only exchange that you want to be paying attention to. So first of all, you want to go to coinglass.com, then you go to the funding rate tab. Okay. When you look at BTC funding right here, what you generally want to see is when there's a bottom being created, right? So let's just say, you're sitting on, let me give you a perfect example. Okay. Here's a perfect example. All right. So say BTC rolls over from here and you start seeing these lows hit. Okay. You start seeing these lows hit and then price starts to consolidate right here. But if you look on this, what's it called? CVD right here, right at the bottom. Okay. If you start seeing on the CVD that there's heavy selling happening, all right, there's heavy selling happening. Price is not budging. Okay. So there's a couple of things have to come together. All right. So I'm going to show you right now how a perfect bottom may look. All right. I'm going to tell you guys perfectly. So here's what happens. First of all, sell pressure keeps going down. Oh, I'm sorry, not sell pressure. Selling is aggressively happening. Price bottoms out and it creates like a range like this. Okay. So what you're seeing is a range develop like this. Okay. And open interest is starting to climb back up and you start seeing funding rates turn negative. All right, what exactly is happening in that situation? Okay, when price is basing out and selling is still happening, that means that there are passive buyers who are absorbing all the sell pressure that's happened at this level. They're refusing to let the price break any further. So this CVD, remember, is cumulative volume delta. It is an indication of the market orders going into the system. So when you see heavy selling happening as per CVD, but you're not seeing the price move, okay, and you're seeing open interest climb like this, that means that there are some big whales who are getting their orders filled right at the low, while a lot of people are selling down here. And at the same time, a lot of people selling also might be shorting, okay? While someone else is just absorbing all that flow. So when you start seeing negative funding rates, that means people are heavily shorting at the lows while creating a base, and the CVD goes down while open interest is building up. This is all an indication of the passive hand in the market who's absorbing all the sell orders into their buys, and they're going to eventually absorb all the selling, and they're going to drive the market up. Okay, but to answer this question, yes, you want to be paying attention to funding, but not just BitMEX. You've got to be paying attention to FTX nowadays, definitely Binance, and of course, definitely BitMEX, because BitMEX is not the only big player in town anymore, right? FTX has huge volume on the derivative side. Binance has huge volume on the derivative side, and so does BitMEX. Okay, so definitely pay attention to those. When you start seeing all these start turning negative, like remember a couple of days back when we saw Luna heavily negative, right? We just said, well, holy shit, like whoever's shorting this thing is really dumb, because price just kept going up. It literally went from like $90 to like 104 or something, right? So same thing can happen with BTC is, you start selling and finding support at the lows at 45 or 44. People keep selling, funding turns negative, and then the big whales just start driving the price up higher. Cool. All right. I think today's session was very helpful in terms of my macro thoughts. Let me see here. Is there another question? Okay, cool. All right, that's about it, folks. Thank you so much for watching. All right, good luck to you, and we will catch up soon. I'll keep y'all posted with my thoughts. Cheers, everybody.